Welcome to another price action training lesson. We're looking at S&P 500 and mini futures. We're going to be relying on pure candlesticks to help us identify where the market is going and where are the high probability setups. The structural analysis right now is telling me that there was a lot of price action during the overnight session. We had a massive sell-off. We reversed higher and now we have a spike and a channel pattern that needs to get new high tested. I'm using the trendline rule. But right off the bat, when I'm watching this, I know that I have to probably scale down the number of contracts because the market is moving very, very fast. The bars are bigger than normal. I don't like these super volatile days because market is moving fast. There is so many candles on the chart to take into consideration, but sometimes market's going to be like this. Whatever it calls this, it doesn't matter. Either way, you need to make sure you're going to scale down because the bars are bigger, so your risk increases. You may increase the target profit. Downtrend played out, and now let's focus on the most recent structure. We have a spike and a channel pattern breaking new high. So I was now expecting price action to correct or reverse. So let's see what's going to happen. I'm just waiting. At this point, I don't have no clear bias in this market simply because my main trend played out and I can be thinking about buying. At this point, I need some additional pattern. So market is still going higher and we keep staying above the EMA. So this is already telling me that prices are a little bit more bullish than I initially expected. This was quite significant push to new high. Let's see what's going to happen. We have a second entry long, but the problem is that we just hit a new high for our initial spike and a channel pattern. So I don't really like going long just yet, but you can already tell that there is no reversal because you have mini two-legged pullback down, push above EMA. So already price action is giving you information that it is still quite bullish. A little bit too early to go long just yet. We just break a new high, but market keeps going higher and we keep going higher. So at this point, I'm really not even thinking about selling, and in back of my mind, I'm already trying to look for some additional bigger bullish channel because it's still too bullish. So I'm still pretty much waiting, following the short-term trend line rule. Downtrend, breaking new extreme. Downtrend played out. It visually looks like a two-legged pullback, one leg down, break, second leg down. You have a new high, first entry long, pullback, second entry long. So this is what we can call a double trap because it stopped all the early buyers while the downtrend needs to get an extreme. We still don't have good big uptrend, okay? We're just getting information that the market is quite bullish, that the bullish bias is still present. Also, it's very, very big, 6.75. So tempting setup, but we can't really take it just yet. EMA is getting too flat. We have a felt second entry short, which was tempting. New low right here, the lowest of the pullback, first entry short, second entry short. Further, at this point, we can consider buying because there is simply no bearish reversal. There is small support, but the signal bar was not great. You can see bearish body at the top, so I can't really go long just yet, especially if we are going sideways. Still ended up working though. Market keeps going higher. We're too sideways, so this is basically sideways price action, but I can see consistent series of high highs and high lows, so I was looking for some spike in a channel pattern. Something like this, because I have to explain why after breaking new high, prices keep going higher and we keep going higher. Now, I want to zoom out. This is not the best structure because our initial channel played out with the breaking new high, but then we have another spike in a channel pattern. This doesn't happen often. This is the secondary channel. This doesn't happen often. During after breaking new high with the initial channel, we're going to have different market structure. This is why I don't really like these super volatile days where there is so much candles on the chart. It's really hard to find the exact pattern, but this helps me not to sell at this point. So I'm just waiting here. Let's see what's going to happen. Second entry long will be good because we now have established. Can I get a second entry long? Yes, but the signal bar is bearish. I cannot go long here, so no setup here. We're correcting. I have to redraw the short-term downtrend. I'm going to redraw a little bit wider because the downtrend is stronger. I cannot go long below the EMA. We expect new high, so I'm mainly thinking bullish. We're pushing above EMA, but we're back below. Why are we back below the EMA? So nothing much happening here. We're back above. We get some new low, first entry short pullback, second entry short failure, which is not horrible. It's quite tempting. There is no bearish bar pullback in between. That's not a big of a deal, but why we broke below EMA here? You know, it's not the cleanest structure. You can take a risk. Trading is about taking a risk, so I can mark it, but it's not the best setup. Overall, we're going quite sideways. I recommend just being patient here. Just another sideways price action. And now we're finally breaking higher. So we expect new high to be tested for this spike and channel pattern. I'm going to zoom out, one leg down, break, second leg down. So this is sometimes what trading is about. Actually, a lot of times you need to be patient. You cannot jump the gun where you're not sure what exactly is the pattern. I was completely patient here because everything felt too sideways. You can see EMA in the middle of these bars here as well. So nothing that clear. Price action still works. You can still see that you expect prices to go higher. Now I'm going to redraw the uptrend working higher. Now it's finally becoming easier to read because downtrend played out, brought 2 legs down. You have push above EMA and you expect new high for the secondary channel. So mini second entry long at the EMA would now be a good pattern because the context aligns. I can also draw now this consolidation. Why am I drawing the consolidation? Because we're going sideways for such a long time, flat EMA, consistent pricings up and down. So there's a slight bullish bias with this consolidation. New high, I want to reset the count for entry long. Nothing here, we're going higher. The uptrend played out. The main uptrend to the left played out. So I'm gonna pause looking to go long. We have a secondary channel here as well, this one. But I can't really go long just yet. The downtrend is in play. The main uptrend played out to the left, so I just gotta be careful. We're not even at the EMA here, you cannot go long here. Spike down, one leg down, downtrend is in play. You're not at the EMA, our main channel played out. Close outside, break a new high. Okay, even this one played out. Prices are now going back into the initial trend range. I'm going to redraw the short-term downtrend. Okay, can we go back into trend range? We can break a new extreme, and price action is trending lower quite strongly. Now, the structure is finally becoming a little bit slower at this point when you're trading this live. Easier to navigate because all uptrends played out. Our spike and channel pattern here, even the secondary one. I can right now pay attention to this consolidation. What I want to explain now, why after break a new extreme, we have such a significant push down. This generally means there's some bigger pattern, but if I'm going to use this pattern, this is too broad. This is super broad. This doesn't feel that great. It doesn't feel healthy. It shouldn't really be as wide of a channel, so I need a little bit more information. Market is correcting. I have a short-term channel that played out with the break and a new high. At this point, I'm not thinking about buying at all. And now we have a lower high confirmation setup. Now, this was a very tempting setup. Why? Because you have one leg up, break, second leg up, break below EMA, and there is a lower high confirmation setup of the bearish bias. Now, as we talked about, why there is massive push down on a higher time frame, there is clear broader channel in play. On this time frame, however, if I'm going to draw this channel, I have early break. This was the channel I was watching, because I don't like the super broad one, but this one has early break. That can happen, doesn't happen often, but that can happen. So decent low high, very tempting actually, but the early break made me be a little bit more patient because this is not the best channel you can draw. But hopefully you can see break a new high, push below EMA. It's a bit too bearish, so more advanced trader can consider it's a decent lower high. Market keeps working lower. Downtrend is confirmed. So now we are thinking bearish. We're correcting. First entry or second entry short super far from the EMA. Of course, I cannot sell. No setup here, no trigger here, inside bar, so I can sell as well. Just patient here. We have small consolidation. And now we have fail breakout. You can see we have a small consolidation. This is a small trend range. Most breakouts will fail. This right here is a failed breakout with the direction of the main trend because the downtrend is expected to test the new low after break. You also have the key level as a breakout pullback pattern, great signal bar. So this is a great high probability setup. So finally we're getting some simple price action. This lower high and this failed breakout, they are decent setups. The downtrend is in play. Breakout pullback as well. Failed breakout, you're combining a lot of rules. Break a new extreme. Downtrend played out. Some pausing, looking to go short. Okay, I have a break a new low here. I'm pausing, looking to go short. Push above EMA. At this point, I was really thinking we may go back and reverse into trend range because I just followed the simple trend line rule. Break a new low, reversal up. So I'm looking for a new high. There was no second entry long. We have overshoot. Overshoot can generate stronger pullback in the opposite direction. We're back above EMA, so you're expecting price action to test the new high for this spike in a channel pattern. You know, had this been felt second entry short or made a second entry long, you can consider, but it's only new low, first entry short here. There is no pullback, so it's only high low and new high. There's only first entry long, part of first entry long. So it's a shame. Had this been felt second entry short, you can go long, but it's only first entry long. Break a new high and the uptrend played out. So one leg break, second leg. I'm also going to draw a small consolidation because I'm following the price action as I get more information. All trends at this point played out. The downtrend played out, uptrend played out with the break a new high. So now we have small consolidation and I expect price action to act as a trend range. So I want to sell. Can I get something either at the resistance or lower high or felt second entry long below EMA? You have a lower high that worked here, but it's above EMA and not at the resistance. So I can't take it just yet. You can take a lower high if it's right at the resistance as a triple top or below EMA. This is exactly in no man's land, not below EMA and not at the resistance. So I cannot take it. Felt second entry long is horrible. Bullish bar. I can't sell below this bar. You know, now you have second entry short and another lower high. This downtrend is expected to get the new extreme. So, you know, it's a tempting setup once again above EMA. More advanced trader can consider because you have a second entry short, a lower high, downtrend is new low. You're coming off the range highs, but it's above EMA. Felt second entry long below EMA would be good. No felt second entry long. Downtrend played out with the break. Push to a new extreme. You can see this is a clear trend range. So downtrend played out, 2 legs down. I'm gonna color the chart even more. You can see one leg up, break, second leg up, one leg down, break, second leg down. So this helps you expect right now market to pivot because downtrend played out, 2 legs down. So we expect market to go higher, break a new high. Gonna redraw uptrend, break a new high. So uptrend played out. You have a lower high above EMA. I follow at this point the trend range rule. I expect prices to go back into trend range because most breakouts will. If I look at the left, what happened to the left is gonna tell you what's gonna happen to the right. This is a trend range. All trends played out. So I want to see felt second entry long below EMA to go back into trend range according to trend range rules. You have felt second entry long here, but it's above EMA. It's above EMA, almost great setup. It at least triggered higher, but it didn't. So I gotta be careful. More advanced trader can consider felt second entry long below EMA, but this is the setup. This is a lower high confirmation setup of the felt second entry long because this is above EMA. Now you wait for the push below EMA. Look at the buyers, they got trapped here. Going long at the top of the train. This is a great hypothesis setup. Lower high confirming the felt second entry long. You're below EMA. You're below the resistance. You're playing the trend range rules. Great setup. Market is correcting. We have broader downtrend here. You can draw overshoot or because it pushed lower again. It's not really acting as overshoot. Gonna redraw the uptrend working higher. Break. Push to new high. Great signal bar. We're following the trend line rule. The downtrend needs to get new extreme. You're going to wait for trigger below this bar. This is a great high probability setup. Visual to like a pullback. You have to ride this out a little bit if you're holding bigger target. Now you have a new high, first entry long, pullback, second entry long, failure. Problem is, at this point, it's too stacked. You're really supposed to be holding this and letting this play out. Entering here, you know, it's tempting, but because the downtrend needs to get new extreme, but it's simply too sideways. Downtrend break, new extreme was made, so perfect trend line rule. Downtrend played out. Can we get felt second entry short above EMA? No felt second entry short. I'm gonna redraw the uptrend working higher. Felt second entry short above EMA would be good because they're simply playing the trend range rules. Now we're just in the middle of this consolidation, so this is a no trade zone. All trends played out. There is no bias, no nothing. You're in the middle of the main consolidation. This is where you can get trapped. So no trade zone. We're not even looking for setups in this mess. This is just pure gambling area. We're not gamblers. Market is working higher, so I need to connect these swings. Like this. Initially I was looking for something like this, but this is super broad. I mean, this doesn't look like a channel. This is super broad. So this channel is too broad. It looks like this was consolidation and this was the move where the uptrend started. So we have overshoot. You can have stronger pullback in the opposite direction. There is no trigger here, no setup here. You can't go long below EMA. You need to push above EMA. I was expecting new high at this point. I was expecting some high low or failed second to show above EMA. That never formed. Market reverse all the way down here. So I'm not going to argue with the market. It's too bearish. Okay. Downtrend. You have a small break, new low. Very tiny break. It's hard to see if market is going to consider this as a break a new extreme or not. Let's see what's going to happen. EMA is not rejecting. I was really thinking that EMA is going to reject and we're going to get some nice setup. That's not happening. So because he pushed above EMA, there can be potential break in extreme. I want to see a lower high confirmation setup below EMA to test potential new low. But it never happened. We pushed above, then we're below, we're back above, and now it's just similar to what happened to the left here. We're just in no man's land. I can expand the trend range. No clear bias, nothing is happening. It's getting too late. The market is about to close at this point. Well, we actually had some price action towards the close. I didn't even expect this. So this is the overall structure for today. The market ended up getting back to normal, which was quite good to see. It wasn't as volatile. Initially, you still have to play the bullish bias, breaking new high, but market keeps going higher, keeps going higher. You know, you have a couple longs here that you can consider. I didn't mark those because it was still quite volatile. Bars are big, but there are more aggressive setups, more advanced setups that you can definitely make a case for. And then you have a break in new high, all trends played out. And once downtrend started, you're just combining the downtrend with the consolidation. So the second part of the day was a little bit better. Either way, I hope you had a good trade. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.